Hi, everyone. Thanks for tuning in to episode 15 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing with ALN Apartment Data, and I am joined by the star of the show, Senior Market Analyst, Jordan Brooks. Jordan, how are you today?
I'm good, Patrick. How are you?
I'm doing well. I'm glad to get some time with you today. I know that you've had a very busy schedule over the last month, and as of even today that we're recording this, I caught you just after a speaking engagement, didn't I?
You sure did.
Okay. Well, I know you've been busy, so we'll get right into this. The article that we're talking about today is called Third Quarter, Demand Slowed, but Rents Continue Their Climb. Your article, it starts off with a national view of apartment demand and then kind of moves into rent growth. What were some of the top line numbers there? And then also, what should we take away from that national picture?
Yeah, so at the national level, in the second quarter, we saw net absorption of about 250,000 units, which obviously was just, a massive number for a 3-month period. Usually the second quarter is a strong part of the calendar for our industry. So it's not unusual that would be the highest demand of the year. It's just the volume of units was pretty dazzling. So in the third quarter, we did see that come down a little bit. Net absorption was about 210,000 units or so. Still, obviously, way above a typical third quarter. We went back and looked at the last few years, going back to about 2017. The average third quarter net absorption was about 107,000 units. So nearly double what we would expect in a typical third quarter. And then, that propelled rent growth even higher. Obviously a big story in our industry this year has been rent growth that hasn't been seen in decades, if ever. Certainly in some markets, we're seeing historic rent growth. And so third quarter rent growth at the national level was about 5.4%. And that was notable not only because that's a huge number, but also because that actually was higher than second quarter rent growth. So even though demand receded a little bit, we saw, as the title of the article says, we saw rent growth continue to speed up. And I think, kind of below those national numbers, one thing to take away from that is, the sort of broad-based nature of the positive results, whether you look at market size or price class. We really saw kind of a tide lifting all boats type of situation.
Well, you spent some time highlighting some specific markets in your article. Did any patterns or bigger picture trends kind of emerge from that market level data?
So we did see some patterns emerge. Sort of the main one was something that's kind of fit into some other areas that we've seen. So sort of the lower Atlantic, the South and the Southwest regions have benefited in recent years from really positive population trends. Whether you look over the last decade or just the last 3 years. And, economies in those regions tend to have been open more fully and for a little bit longer than maybe some of the markets, in the Northeast and on the West Coast. So that kind of showed itself in the third quarter results from a rent growth perspective. 18 of the top 20 markets for third quarter average effective rent growth were in those regions. So, again, the sort of lower Atlantic, the Southwest, and then the large markets across the South. And so the two markets that really didn't fit into that were San Diego, and Southern California has performed well relative to California as a whole. So that wasn't overly surprising. And then the other one was Salt Lake City. And, the Mountain West more broadly, not just the Southwest, but the Mountain West region has also, exhibited some of the strongest population growth in recent years. And so there's strong fundamentals in that region too. But again, 18 of the top 20 markets kind of just in that swath of the country was a main takeaway.
It seems like, not only, today talking with you, reading this article, but in other articles, we're talking an awful lot about rent growth. In the takeaway section, you said it could be a double-edged sword. Elaborate on that for all of us just a little bit, if you would.
So it's encouraging to see rent growth kind of back on the scene. Obviously, after all the challenges and disruption of 2020, we saw an improvement in apartment demand last year. We didn't really see an associated bounce back in rent growth until the calendar turned to 2021. So obviously being in the multifamily industry, we want to see good rent growth, and it's an indication of strong fundamentals, in particular, again, apartment demand driving rents up. On the other hand, so much rent growth in so short a time does bring its own challenges. And in particular, in the Class C space, we saw 5% average effective rent growth just in the third quarter alone in Class C properties. And on an annual basis, we've seen 10.5, 11% rent growth in the Class C space. And so, that's an area where residents don't have quite the same flexibility as maybe residents in the Class A sector would. And so, this kind of exacerbates affordability issues, which can lead to household consolidation and kind of depressed demand, which isn't something that we want to see, obviously. And it kind of increases the likelihood of seeing scrutiny from the public and from politicians. When we start seeing headlines about sort of generational or historic rent growth at a time when we're still dealing with some of the effects of the pandemic. So we've already seen that in some markets around the country where local and state governments are starting to try to get involved, and that typically looks the same. You get proposals about rent growth, rent control rather, and looking at fee caps and things like that for ancillary income. So that's not something that's going to be beneficial for our industry, and it's also really not something that's beneficial for the residents, despite what the good motivation might be behind those. So that's kind of the double-edged nature of it, where again, we want to see rent growth. Obviously it's good to see rent growth, but the numbers that we're seeing on a quarter by quarter basis or a year to date basis or even an annual basis are getting so high in a lot of cases that we are going to start seeing sort of good and bad repercussions.
This is going to be an interesting next probably 3 to 6 months to see how a lot of this plays out. I mentioned at the beginning of the video that you've been very busy, and even as of today that we're recording this, what's next for you?
Yeah, so my schedule slows down a little bit now. I think I just finished either 4 or 5 speaking engagements in the last 4 weeks, so it's been a little bit hectic. I spoke in Louisville this morning for their forecasting event. So coming up, no speaking engagements for the next month or so, but I'm going to use that opportunity to get some more blog content going up. So we'll have more coverage not only on third quarter numbers, but kind of breaking down what we've seen so far this year, what we expect to see as we move through the fourth quarter, looking at some new construction data and things like that. So a lot of new content going up on the blog in the coming weeks.
Well, and you don't want to miss that. You can find it on our website at alndata.com/blog. And we also do post every time we put out new articles. You can find that on our social media. You can follow us at ALN APT Data on Twitter, or you can just search Facebook and LinkedIn for ALN Apartment Data. And also right about now, that button's coming up. We want to make sure that you subscribe and hit the bell so that you're notified anytime we put out new content, whether it's the takeaways, videos, or any of our other content on YouTube. Jordan, thank you so much for taking the time out of your day today to talk with me. And I look forward to chatting with you again next month.
Thanks, Patrick. See you soon.
See ya.